Have a foreign bank account? Then here's a question for you. Could forgetting a single online form cost you thousands of dollars, even if you owe zero US tax? For many Americans living abroad, the surprising answer is a resounding yes. Every year, thousands of US citizens and green card holders unknowingly violate one of the most overlooked reporting rules in the tax system, the FBAR, officially called FinCEN Form 114. And while it's just a report, the penalties can be anything but small. So in this video, let's break down exactly how FBAR penalties work under the 2026 rules, when the IRS and FinCEN can fine you, and most importantly, how to avoid those penalties altogether in the first place. Welcome to Taxplained, explaining taxes so you can minimize your tax burden and maximize your freedom. So first, what's the FBAR? The FBAR isn't part of your tax return. It's a completely separate report filed electronically with the US Treasury through FinCEN's BSA e-filing system, not with your IRS tax return. You generally must file an FBAR if you are a US citizen, green card holder, or US tax resident, you have a financial interest in or even signature authority over foreign financial accounts, and the combined value of all those accounts exceeded 10,000 USD at any point during the year. Notice one important word here: combined. Many people incorrectly think each account needs to be more than $10,000. That's wrong. 5 accounts with 2,500 USD each already push you over the threshold. It doesn't matter whether those accounts earned taxable income or not. It does not matter whether the balance dropped the next day. If the total exceeded $10,000 even once, an FBAR filing obligation usually exists. So what happens if you don't file? This is where things become expensive quickly. The government distinguishes between two types of violations: non-willful violations and willful violations. The difference can literally mean thousands versus hundreds of thousands of dollars. Non-willful penalties. Let's start with the better situation. A non-willful violation generally means you didn't intentionally ignore the law. Maybe you simply didn't know FBAR existed. Perhaps your accountant never mentioned it. Or you genuinely misunderstood the filing requirements. Even then, you can still face civil penalties. For 2026 inflation-adjusted maximum penalties for non-willful violations are around 16,500 USD per violation, although the exact amount depends on the applicable adjustments year and the specific facts of the case. Many summaries still refer to the older 10,000 USD figure because that was the original statutory amount. The IRS also considers the facts and circumstances. Not every late FBAR automatically results in the maximum penalty. Reasonable cause and voluntary correction may significantly improve your position. Then there are willful violations. And now let's look at the penalties nobody wants. A willful violation means the government believes you intentionally ignored or recklessly disregarded your reporting obligation. If that happens, the civil penalty becomes drastically larger. The penalty